All right, good morning. Welcome to stream number 10. So, through the first 9 streams that we've had, we've seen a little bit of everything. I'd say we've not had any really exciting, crazy days yet. But we've had some good days. We've had some quiet days. We've had some mistakes, all of which is totally sort of part of the game. But overall, we've done well. The last 2 days have been losing days, not significant losses, but losing days. And I've learned more from those 2 days, as I always do, than I do from winning. I want to talk about that in a bit in a minute. But first is the market. So a little bit frustrating yesterday. I'll quickly go back to it. So we made a trade which lost yesterday. Let's go back. We were just slightly too early. So we made a trade here. We went short. We went short on a breakout lower. We made about half profit there. We made about £80 on that trade. And then we came back up and I saw this here as a retest. And then I went short, I believe here, I want to say. At 10:01, I believe I went short. Somewhere around here. And we got stopped out just here, man. Just here. Before the market then sold off big time, all the way down to our profit target, which was the bottom of the overnight range. So this would have been a fantastic trade. Now, I could say that's bad luck, but rather than doing that, I'm actually going to try and work out how I can prevent this from happening next time. So trading within the overnight range is difficult, but there's going to be times of the year, like now, where the market's going to spend a lot of time in here. And I am going to trade less when the market's in this sort of position. Right? It'd be crazy not to trade less. But there are good trades, and it's all to do with VWAP. It's all to do with VWAP. So the way I want to explain it is that when the market is breaking out either above or below the overnight range, this is the market out of balance. This is the market that is basically saying the price we've spent the night and maybe longer in is no longer fair value, and we need to find new fair value by breaking out. So by definition, the market outside the overnight range is usually breaking away from the mean price. So meaning it's moving away from VWAP, and you see that here yesterday, which is another trade that we made. We had one loss and one win here, where we were trying to trade on holds above VWAP, breaking away from it. But within the overnight range, placing a trade down here when we're already, let's have a look, how many points? 120. We're already 25 points away from the mean price. Trading a breakout 25 points away from the mean in a market which is tending towards the mean doesn't have a very good probability of winning. And that's without having to do any research. That's just using pure logic. So within the overnight range, the market is tending towards the mean. So if we're going to place any trades, we need to be placing it close to that average price. I hope that makes sense. I hope that's logical. I've made several trades already throughout these first 9 streams, successful winning trades using VWAP. Like we did on Monday, we made 2 winning trades on Monday, both of which were trades on retests and rejections of VWAP. But I simply need to go into the market with that mindset when the market is trading within the range. Because, yesterday, any trade where we were trading a rejection at VWAP would have been a winner. You could have traded this one. This would have been, I think, a little bit premature. But if you had traded it, it would have worked. This one would have been a really good one, which we were actually looking at. But this 1 minute candle here just moved so fast, we just didn't get a chance to enter. And that's, nothing wrong with that. That happens sometimes. But this trade here was the golden trade. This was an absolute 10 out of 10. But the problem is, and we could have taken this trade, but the problem is we'd entered here and then got stopped out. And then my appetite for entering another trade was not there, because I didn't want to risk really denting my account. But this was the trade. This was the trade yesterday. This would have been a really good trade, because I'd have entered down here. Stop loss would have only been about 15 points. 15-point stop loss for at least, at the very least, even if I took full profit at my first target, for about 28 points. So that's a 2-to-1 trade, which in my current money would be about 350 to 400 pounds. That's a great trade. And if we're going to trade within the overnight range, that needs to be the only type of trade that we win. Sorry, the only type of trade that we make. So that's great. That's great. Highly useful information. Now, going into this new year, the focus is on data collection. And I want to go into that now. I just need to change screens. Okay. So the data that I've been collecting for the last 6 to 8 weeks is essentially redundant, because I've not been trading a specific system with consistent enough execution, because every different strategy, every different entry method has its own risk reward, its own expectancy, its own win rate. Doesn't mean one's better than the other, but it means they cannot be analyzed together. And this next year, for me, the key thing, beyond just making some money, the key thing for my future success is that I come out of it with a year's worth of data, which can be analyzed and then help me refine going into 2027. I make approximately sort of maybe 5 to 10 trades a week, depending on the week, and if there's 200 trading days in a year, that's a lot of trades. That's a lot of trades. Making 1 to 2 trades a day, you're sort of looking at maybe 500 trades throughout the year, something like that. Maybe between 400 and 600 trades. And if I can use very specific entry models, then that is going to be incredibly useful, because I want to understand my expected value. And this is maybe the most important term when it comes to trading, because without understanding what you expect to get from the market, from the system that you've developed, and your proficiency in executing that system, it's very hard to not trade without any sort of gambling element to it. Because I want to know exactly what my system should provide, exactly what it should look like, and exactly how it works. I can only do that with data. Currently, I have no data, and that's what I need. That is what I need over the next year. every time I lose a trade, as long as it is within my entry model, following my rules, it is increasing my expected value. Because every losing trade, like I've had the last 2 days, I've learned from, and then I can refine. And that is incredibly useful. So just like yesterday, trying to trade that breakout within the overnight range, we've learned from that, and we'll no longer do that unless it is a breakout from VWAP, and that's great. So my expected value, meaning the money I'm now expecting to make going forward, is greater than it was before yesterday. And that is sort of the key to long-term development and success. But the key thing is that I fill up this Excel sheet with quality and consistent data. So I have 2 entry models. One is a classic breakout retest above or below the overnight range, and then the other one is a breakout retest of VWAP, and that can be within, that can be above, or can be below. And all this data can now be given to AI, to ChatGPT or whatever, and then can be analyzed. And we've got a lot of variables. You know, we've got 24 columns, probably about 20 of those can actually be analyzed. So for example, my setup grading. So this is completely discretionary. So this is going to tell me how much is my gut linked to my profits. So when I grade this an A, I should win most of them. What is my win rate when I enter a trade and I think this is an A setup, versus what is my win rate and profit factor when I enter on what I would consider a C setup or a B setup? I currently have no idea, which is a problem. Direction, long or short. Am I better at trading longs or shorts? And am I better at trading longs within the overnight range or above? Again, I have absolutely no fucking idea right now, which is a problem because it means my trading is less informed. Points from VWAP. Do I have a better chance of winning trades when I'm entering closer to the mean? Again, I have no idea. My exits, so my profit taking. Am I taking profit? Let's say I take profit here at 24,000. I take half there. Then I take 24.10. Then I take 24.20. Am I taking half profits too early? Or am I actually taking half profits when I should be taking full profit? And then my final exit, I'm actually making less on that. Again, I have no idea because I have no data. Is my first exit above or below the overall average exit price? What's my risk to reward? Does the average true range affect my risk reward? Does how long I hold a trade for affect how much money I make? Am I good at short trades, medium trades, longer term trades? What's my max drawdown with each trade? So that's going to help me see, am I entering too early? Am I entering too late? Can I minimize drawdown and maximize profits? All this sort of stuff. I need to know it. If I knew these things, I would be executing with so much more confidence, clarity, conviction, all that, than I am currently. But the only way of getting this data is to trade the exact same system for at least a year. And that takes immense discipline because the market is chucking what could be considered opportunities or traps, depending on if you're glass half empty or glass half full. But it's constantly throwing shit at you, tempting me or anyone to make a trade. And I have to resist that until I have a system that is data backed, proven to make money. So that's really my mission statement for this next year. Anyway, let's get back to the charts, because we have got some interesting stuff going on. So we are sat at yesterday's closing price, which is PDC. And we have found some clear resistance. So this is how we're looking. So yesterday we broke below Tuesday's lows in the afternoon. We then held below those lows as key resistance. And now we are moving into what was that consolidation area yesterday. Now you could definitely argue that this is a break and retest. And I'm going to strongly consider taking this trade. But I need to get an entry that suits me. Okay, I am long. I'm long the DAX. I'm going to be quite careful with this trade. It's certainly a classic setup. I'm just thinking, could it be too early? I'm going to come out of this trade for break even. I'm happy to re-enter, but I'd like to see another little leg up before I commit to this trade. So stand by. I'm still certainly interested in this trade. I just want to see a bit more proof of strength. So if we can push higher from here, I'd be long with a stop loss below. As it stands, I'm pleased. I came out of this trade. So we're going to be retesting this opening high. This is maybe the retest that I've been waiting for. Now, if we can hold this and close higher, then that feels like proof of strength. If we can make a higher high and close there, then I'd be much more confident. Because now this is looking like a pretty classic break of the high, hold, and then make a real push. But I need to see a nice green candle closing at the highs for me to be convinced. And then stop loss would go down below this consolidation, or the retest, I mean. Okay, so it's starting to look quite good, but we need to see it close. Until it closes, I'm not convinced. Okay, I'm long now. So you can see we've broken above the high of the day. We've then come down and retested it once, twice. The idea is that we'll now hold this high and then push higher. Looks like I've entered too early. Damn it. Well, you can see the difference to last week, because last week they were working a treat. So potentially I should have waited for it to break one more candle. Maybe that's a reflection of the market conditions we're in. We need to be more patient. Yeah. Let me just go back to the other screen. Okay. Yeah, I just needed to wait literally one more candle. So I think this is where we need to be more sensitive to market conditions. Because the market's been extremely weak these last couple of days. You know, if the market was extremely bullish, going long here, like last week, you know, was a good shout. I think this week you got to wait. You got to wait until it breaks above the high, because until it does, it's still odds on to reverse. Oh, I'll be back in a sec. So this is what I mean about following the system. Entry on clear follow through away from the consolidation, closing outside the area. I don't like reusing the word consolidation. Closing out. Okay. So either way, the mistake here was that I should have waited for this candle to close above here, because then you don't get faked out. That's the mistake, which is an extremely easy mistake. But it's a sort of mistake that I need to not make. Because essentially when the market's moved up here above the highs, any people that are short selling are being stopped out. And the market is much, much, much more likely to continue up higher. But, you know, and this is all, again, useful information. Market's trying to hold VWAP here. It'll be interesting to see if it manages that. This is again looking like it's going to be a bit of a nothing session, which is to be expected. I think next year, my year will finish on the 12th of December. I've never traded this week before. This is just a week to avoid in future, without a doubt. I'm just going to wait till 9 o'clock. I will stream tomorrow, but not with the expectation of actually doing anything. And then I'm not going to trade at all over Christmas because it just feels like a waste of time. January should be a lot more interesting. Okay, the market's trying to push higher. I'm very, very cautious with this. Very cautious. So what we want to see is we want to see the market break out above the high of the day. We want to then see it retest and then close at some new highs. But I'm not convinced. Honestly, it's going to take a lot. It's going to take a lot for me to try and trade today. It's easy to get caught up in having 1 week where the market's quiet and forget the bigger picture, you know. Come end of January, I'm probably not even going to remember this week. Yeah, it's not happening today, is it? It's not happening. All right, I'm going to call it there because I don't want to. I've got stuff to do that is more productive. I want to do this more going into next year. Is when the market is quiet. Just call it early. Call it early. So thank you very much. I'll be back tomorrow, which is likely going to be another quiet day, but that's fine. And then we'll have a break and then be back in January for what should be an extremely exciting and interesting year.